Welcome to Profiletrders. This is Reza and you're listening to my market analysis for April the 11th. We are looking at a chart of ES here, Imini's ES, and looking at the profiles, we can see that there are many profiles that are overlapping into each other, which is a clear indication of a sideways trading range market. And the trading range bottom are two-folded. There is one at 2034, which we can see one time here, 2, 3, 4, 5, 6, 7 times we have tried to break this 2034. We 2 times marginally broke it to the downside and failed to follow through, return back into it, and then another bottom at this low here of 2026. So technically we are now at the bottom part of the trading range. If market continues to hold the 2026-2034, because we are in such a sideways rotational market, that will then enhance the chances of a return back to trade to the upper part of the trading range, which has also 2 tops, 2055 and then after that 2072. And if I bring you a candle chart, this will become much more visible. So this is the 2072 and this is the 2034. Now, 2 very important events are taking place this week. Number 1, it's going to be the release of the earnings. And as you are aware, many articles are out there stating that this will be probably one of the weakest earnings season that we have or we will see since 2009. And number 2, we are dealing with the option expiration week. So these 2 things will greatly influence the market. Now, if you look at the daily chart, we are going into the weakest earnings season since 2009 with almost 200 at this point 34 points rally. 2 things will happen in my opinion. For whatever reason, Wall Street will not care about earnings like it has during this whole last leg up by surprising everybody and climbing the wall of worries for 200, almost 70 points at its top. And if that's the case, there is no doubt in my mind whatsoever that this time around we're gonna go and take the very all-time high that we have in place. Or we have already done so much to the upside that it is becoming very tough for the market to bring in new buyers backed by such a weak fundamentals. And as soon as the earnings will confirm that fundamentals have not been yet to support such a rise in the market, then we're gonna start to give in and retrace a very good portion of this 270 points of a rally up. As far as the Federal Reserves are concerned, I think at this point there is no more credibility left whatsoever in what they will do or not do. At this stage, we know their position. Their position is that they are very apologetic about their rate hikes in December, and their view of the economy in December was totally wrong because 30 days later in January, they completely changed their tune. They went from talking about a very strong economy in need of 6 rate hikes this year to a very soft view of the economy where at the very maximum there will be another 1 rate hikes or maybe 2. And the market has already rallied 5 to 6 times every time that we heard that statement from Yellen, even as early as last week during this session here, where they were all gathering in New York having cocktail party between her, Bernanke, Greenspan, Volcker. She again stated how things were unstable and how the Fed was careful moving forward. Again, that statement created a rally to the upside. But as we can see now, every time there is a rally based on that same statement for the 5th or the 6th time, market is kind of getting tired and bored and there is no momentum left for continuation up, and immediately, like today, we reverse anything that ends up being bullish on these Fed statements. So to make a long story short, a big move is going to happen, and I believe it's going to happen this week. We are either going to collapse, and the very first level that we need to break is 2026. If we do that, there is a POC at 2018, and past that there is really not much of a support but 2000. Or we're gonna go up. At this point, the first level of resistance on the upside comes in at 2045. If we can trade through that, push through it with volume and expansion of price to the upside, next level to shoot for is 2055, then a POC at 2056, and finally 2067, and the upper part of the bracket is 2072. So let's see which side of this very massive trading range the market will exit. But so far, based on today's close, a close at a very low, very weak close, it indicates the odd that possibly we are not going to see an exit to the downside for a test towards 2000. Now, as far as crude, it is holding its ground. It did not follow at all what ES did. There are a couple of things to keep in mind here. Number one is that the weakening of the dollar has always been a very positive fact for crude. Number two, I also believe that somehow there is this invisible hand, which I would not call the Fed, has been supporting the price of oil to the upside for a couple of reasons. Reason number one, when oil was trading at $24 or $25 down there, as you all heard, that we were at very much so at risk of seeing a lot of financial institutions that did lending to the fracking and the drilling and purchase of equipment and all that go belly up, and there was talk of a potential crisis equal to the real estate bubble but in the oil industry. Number two, it was extremely difficult for the Fed to justify hiking rates when crude was trading below $30 because there was absolutely no inflationary pressure put in by crude. So all of a sudden we saw price coming up from $25, $26 to $42. But we cannot deny the fact that it does hold strong for now, and also we have to look at this being an uptrending channel that we can very well now define by these two boundaries, And if market really wants to push higher, crude has the potential to go and trade towards $44, $45, at which point I believe it will become very, very difficult to further sustain this move on the upside, because the same way that the market, the fundamentals are simply not here to justify a sustained push to the upside for crude. Supply is very much so abandoned. Demand is extremely weak because of all the global economies not doing well. And we already have seen a very nice rally from the lows to this $42 high. So once it reaches the upper part of the channel, I think it's going to encounter significant resistance. Of course, now at any given time that we come down and break this trend line that is holding the short-term trend up, will probably create a lot of anxiety and liquidation to the downside, which could then bring price down to $34 and then possibly $32. In terms of short-term support resistance level, resistance 1 is at 41.10, resistance 2 at 41.40, then 41.70 and 42. On the downside, support 1 is at 39.56, after that 39, and then 38.6. So this is holding a bit better than ES, but again, it's very overextended up, not backed by fundamentals. If by any chance market starts to melt down, I could very much so easily see crude following to the downside as well. This was Reza with Profiletrders. Thank you for listening. And again, if you wish to learn market profile, join my trading room. Check my website, profiletrders.com. You can have access to 2 days trial to look how everything functions in my trading room, as well as the teaching. To the next time.